and the Senate to schedule it for a vote on Wednesday. The vote should be fairly good. The vote in the House was overwhelming. It was about 380 votes, which is very high. And in the Senate, it'll be well over the 60 votes that are needed to pass it, and then it'll go to the President for signature. So, can move on. Next slide.
Sure.
Okay. What does it include? Well, basically, we had about 55 provisions or so that expired at the end of 2013. This bill extends just about all of them. There are a couple of very tiny ones that have nothing to do with labor or job credits that were not extended. But basically, all of those are extended for the current calendar year, which is 2014. In the bill, there are 8 individual extender bills. The individual extender bills deal with issues such as the authority of people in states that do not have an income tax, sales tax. Then there are 31 or so business tax extenders, including the research credit and the opportunity credit. And then some energy extenders, including the wind energy production tax credit, which had been criticized during the year and looked like it might not get extended, but in this short a bill, it's going to be extended for this year. There are no material changes to any of the credits or incentives. It basically extends them all. To a great extent, this is really the fallback position that Congress had, especially the House of Representatives. There was an effort to negotiate something much larger, which would have combined some permanent extensions of some of the provisions, which essentially was the way the House of Representatives had handled the extenders this year. They had made 8 or so of the provisions permanent and had extended and was contemplating extending the rest of them for 2 years. The Senate tried to cut a deal with the House that would have extended 8 or 9 provisions on a permanent basis and then everything else for 2 years. That bill would have cost around $500 billion as opposed to the cost of this bill, which is about $44 billion. The White House intervened because it complained that among the extensions, Congress had left out, or the negotiators had left out, extensions of the child tax credit and earnings tax improvements that would otherwise expire at the end of 2017. And when the White House intervened and threatened to veto the package that was being negotiated, it left a very bitter sense on Capitol Hill about the White House involvement in the issue. And the House came back and basically said they didn't want to hurt anybody in 2014, in the year in which things had already expired, but they weren't comfortable negotiating with this White House right now, nor were they comfortable necessarily negotiating with the Democratic majority in the Senate. And so they took the position that they would hold everybody safe for 2014, pass a 1-year bill, and deal with other things later. So the bill doesn't really change anything, but it gives everybody the protection of a 1-year extension for 2014. That's about all it does.
So just to make absolutely clear for everyone, as far as WOTC is concerned, that means that employees who were hired and screened during 2014 while the program was in hiatus, those employees should be certified once the legislation is passed, and then we'll be back right where we started at the beginning of 2015 in another hiatus year.
Correct.
And we'll talk about later, we'll have some questions regarding the potential for a retroactive WOTC period and again, what might be happening in 2015. The Senate also had, besides the permanence issues in the Expire Act, there were a number of changes proposed to WOTC as well as to the R&D credit. And what is the story with?
Well, those were also not enacted. Basically, when the House went back to its fallback position, which was a hold harmless extension for 2014, they also rejected any of the changes that were in the Senate bill. So the WOTC that will be extended by this bill is the current WOTC without any add-ons or changes. Also, same for R&D. Essentially, the bill that is before, will soon be before the Senate, is just a change in dates, an expiration date to go 1 year forward. As you look in this slide, basically says no significant changes to the research credit, no additional changes to WOTC, no changes in the energy provisions either. Basically just let's get through the year, hold everybody harmless, extend everything for a single year. This is a fairly unique thing for Congress to do. Normally, the extension will take us beyond the current calendar year, but the negotiations broke down, and this ended up being the easiest way to get something done and make sure nobody was put in a difficult position. But as Max mentioned, what it means is that let's assume the extension is signed on the 12th, which is possible, which would be this Friday. That would mean that the program is in effect through the end of December for this year, but then expires again at the end of December, and we find ourselves back in the position of being in a hiatus almost immediately.
So that brings us to our next topic of what do we think is going to happen next year. So the first question is, in 2013, when the program was renewed retroactively to cover 2012, the IRS allowed a short period of retroactivity on WOTC. Some people I know were asking me about whether that would appear in the legislation or not. And in 2013, that was not part of legislation. It was simply an administrative decision by the IRS. Has there been any kind of talk about that happening again for the 2014 year?
There hasn't been a great deal of public discussion of it, and I probably wouldn't expect there to be much until a notice is issued. The last notice that IRS issued, Notice 2013-14, did in fact waive for a period of time, it was until April 29th of 2014, the contemporaneous certification rule, which meant you could actually go back and find employees who were WOTC eligible even though you didn't do the things that the statute requires you to do when you're first qualifying somebody. The likelihood is they will do the same thing. I can't guarantee it, but the likelihood is they will. The reason is that 2 years ago, this was a deliberate effort to be accommodating to taxpayers who had been disrupted by Congress's failure to enact an extension quickly. You may remember the last time they also went the last time they went slightly over a calendar year. But I think there is the same sentiment at IRS and at the Department of Labor. I've spoken to both, but can't guarantee what they're going to do. But I do think the likelihood is they will take the last guidance and issue it again with a different set of dates. So I think that's likely to happen.
I think in 2013 they only came out with that maybe in March of that year and they gave us through April of 2013.
I believe that's correct. Yeah, I believe.
Any chance that, given the fact that they have that template, it might be different? They might give us come up with that.
It may be. I've talked to the Department of Labor and urged them to move quickly. Normally, the sequence of a re-implementation of WOTC is that the IRS puts out something first, and then it's followed by DOL. I've also urged IRS to move very quickly. I think they will, and the reason I think they will is that one of the reasons why the one-year extension was granted, even though actually there were some Republicans in the House who didn't want to negotiate at all with the current Senate and basically said they didn't want to do anything on this until January, is that the IRS commissioner forcefully told the Congress that if they didn't extend these provisions, the filing season for individual and business taxes was going to be messed up. The filing season beginning in January, and many of these provisions do affect individuals. And as a result, the IRS has put itself in a position of having to show Congress that it meant it and it wanted quickly to implement the filing season. So I have a feeling they will try at least to get some guidance out the door very, very quickly. The one thing that makes it difficult to talk to the IRS or Labor really about what they're going to do is that in a sense they're not authorized to have a discussion with us until the President signs the law and there is an extension. Right now it's all speculative. But in conversations it looks like the IRS wants to put something out there fairly quickly. And they have some time to do it. So hopefully it won't take as long as it did last time. If we want, we can move on to 2015. And
yeah, I'd like to talk about that. I'd like to invite anybody that is on the call to type in their questions that they have into the GoToWebinar device. And that, I think, does bring us to the big question, which is what is going to happen next year with all of this legislation, especially in the context of so much discussion about tax reform.
Right. I would start by saying the likelihood is that we will get another extension. And the reason I say that, besides the fact that I've spoken to a number of the senators and staffs on the Hill, is the fact that the intention here this year was to get a 2-year extension. Senator Wyden, the current chairman of the Finance Committee, and his ranking Republican member, Senator Orrin Hatch, who will be the chairman in January, basically when they passed the Expire Act in the Finance Committee, said they didn't want to have another extenders debate. What they wanted was to buy themselves 2 years through the end of 2015 to come up with a tax reform plan that would have the effect of making some of the provisions permanent and discarding some of them. And by having 2 years, they could put the issue off the table, give the business community and those individuals affected by some extenders a breather until they could come back and have a permanent tax code. That did not happen. They neither advanced tax reform in 2014, nor did they get a 2-year extension. In talking to some of the people with Hatch and Wyden, and even with other members of the committee, there is a desire to try and get another year done fairly quickly in order to get these issues off the table. The difficulty will be, and Senator Hatch is very much aware of this, that if they don't, when they try to bring the business community to the Hill to talk about tax reform, what they're going to hear is a lot of companies saying, I'm very interested in tax reform, but I'm a little concerned about what's going to happen with the expired provisions in 2015. And frankly, there is no scenario, none, that would suggest that tax reform is going to be retroactive to January 1, 2015. It is going to take the Congress a long time to get tax reform done. It is true. They have done a lot already in this area, so they have a foundation to work from. But Congress doesn't move that quickly, so that even if they come together and they're able to enact either comprehensive tax reform or, I think more likely, a significant part of business tax reform in 2015, they are not going to get it done until late in the year, and it's not going to be effective until at the earliest January 1, 2016. So you're still going to have this year's gap. So the Senator Hatch and Senator Wyden are concerned about having us come to the Hill to talk about tax reform and hear nothing but questions about when are they going to do the extenders and how quickly are they going to do them and how long is the next extension going to be. So again, it's hard to guarantee what they're going to do, but there will be an effort, I am told, very early in the session to try and do that second year that they wanted to do in the first place. For some House Republicans, the impediment to doing the second year was they really didn't want to negotiate with Senator Reid as Majority Leader. Starting January 3rd or 4th, Senator McConnell, the Republican leader from Kentucky, is going to be elected Majority Leader, and presumably some of his House colleagues are going to feel much more comfortable negotiating with him. So one possibility here is that they will try to do another year of extenders pretty quickly in the year. Congress isn't very good at doing things quickly, but this is something they intended to do. It's a little leftover piece from the prior Congress, and it is possible that they will take a real honest and sincere stab at doing it fairly quickly. Now, I would point out, regardless of what happens in tax reform, and there will be a genuine effort to do it next year, they're still going to have a gap. There is no way anything that, even if they made some of the provisions permanent on tax reform, nothing in tax reform is going to be effective until after next year. So again, this gap period is something that will be on their minds, and the same issue will be the case next year as it was this year, and that is that not extending the provisions leads to an increase in taxes, which is something that Congress would rather not do, especially a Republican Congress. So I think they may act fairly quickly. Now, as to how
what about the notion that these tax extenders, since they generally enjoy a lot of support, become negotiating tools in the larger issues of tax reform, and maybe they may be held hostage over these larger issues of tax reform?
Well, I think they do with respect to tax reform going forward. I don't think they do for 2015, because 2015, again, is a gap year, and again, you have an increase in taxes if you don't deal with the. You may on a going forward basis, because the question is going to be, once you get beyond 2015, and if you do have tax reform, then what do you do about these provisions? It really has become a drag on the system and an unpopular thing in Congress to keep having to reenact these provisions every year. It is very bulky and difficult, and so there's going to be a desire to look at them and figure out which should be permanent and which should not, which should be part of the tax system and considered so important that they're enacted for good, and which ones probably we shouldn't have. And there'll be some tension here. There certainly will be a desire as part of tax reform to lower the corporate rate, and as a result, there will be a desire to get rid of some of the provisions to get there. But there will always be some provisions that will survive that debate, and so the question is which ones. My sense, the other thing I should point out is tax reform is hard to do, even with the groundwork that's already been laid. And I'm not certain they're going to succeed at it either. The areas where there is the most agreement on tax reform are business taxes and international taxes. There is not a lot of agreement between Democrats and Republicans on individual taxes. The reason for that is that the president fought very hard in 2012 to restore the upper individual rate to 39.6%, an increase from the 35% that had been under President Bush, and several years later under the Bush tax cuts in 2001. The president is very reluctant to lower that rate again. And so without that, he may not find a lot of takers on the Republican side for individual tax reform. On the corporate side, there is universal agreement that the U.S. rate of 35% is way too high and ought to come down, and that it's an international problem for our companies that we have these high rates. There's also a feeling that the basic structure of the U.S. international tax system, which is what we would call worldwide taxation, is out of sync with the rest of the world and also needs significant changes, and that the fact that we haven't made these changes makes our companies less competitive and, frankly, has made some American companies contemplate, and some actually go through with, a change in domicile to an overseas jurisdiction so that they're not fully regulated by the U.S. tax system. So there is a desire to do this, but whether they can do comprehensive reform or whether they can even do a piece has yet to be seen. And whatever they do is going to take some time. The other thing I'd add is that one challenge they do face is, while there is agreement on lowering the corporate rate, we do have an issue here in that most businesses in the United States are individually owned. They are either sole proprietors or partnerships. That's a very large part of American industry. They're not affected by a cut in the corporate rate. They would only be affected by a cut in the individual rate. And so there'll be a debate about how to cut the individual rate simply for businesses that are structured that way, or whether you have to lower the individual rate across the board, and that's going to be an issue. So there will be tax reform, but it is unlikely to really significantly change the discussion of extenders, because it is unlikely that the nature of extenders is going to change that quickly, and the tax reform incorporating some and eliminating some is going to happen all that quickly. That's something to bear in mind as we go into next year. Had they enacted the 2-year extensions, then Senator Hatch would have started the year by saying, we have 1 year to get this done, and we don't want to talk about the extenders, because we don't have to, because you've got them through the end of the year. And if by chance we failed to do them, we failed to do tax reform, then these things aren't going to expire until the end of 2015, and we don't really have to worry about doing them. We'll do them retroactively if we have to. We'll do them in late 2016. He doesn't have that luxury right now. So his best bet is to get another year out of the way and then just talk about tax reform and see what happens between the next 2 years to the presidential election.
So I recently heard Paul Ryan, who's going to be the new chairman of the Ways and Means Committee, in an interview say that in order to get the corporate rate lowered, we will have to see some of these extenders go away. In view of that, what can you say about, in particular, WOTC
Sure.
and the R&D credit, I think, which are of the most interest to our callers?
Well, Chairman Ryan's statement was really in connection with tax reform, and that is the formula for tax reform, is to reduce tax expenditures in order to lower the rates. And so it's a sincere statement, but it really is linked to creating a new tax code. It is less linked to doing potentially another temporary extender bill for 2015. But I think sincerely he does mean that that's the way he would enact tax reform. Now, with respect to the two we're interested in, over the last couple of years, working with our Association of WOTC Companies, which is called NEON, we have developed a number of studies that show that the effect of WOTC is to significantly reduce welfare costs at the federal level by somewhere around $17,000 to $18,000 per hire. And in the aggregate, and we have it broken down by states, on the state level, close to $2 billion highly outstripping the cost of the program, but also creating a different way of looking at WOTC, less as a tax credit and more as a way to reduce entitlement spending, which Mr. Ryan is very interested in doing, as is Senator Hatch. So I think WOTC has a new role in the way Congress will look at tax and entitlement reform, and it could be one of those provisions that even in a tax reform environment are retained. We've had a good deal of very positive reception to all of these figures. And I would also add that for Republicans, tax reform and entitlement reform go together. The reason is that Republicans tend to view the tax system as raising or as wanting to raise a set amount of revenue, usually expressed as a percentage of GDP, and not more. And if you set the tax system that way and you don't deal with entitlements, you do run the risk that the entitlement system will just continue to grow and you won't be bringing enough revenue to meet it. And of course, we already run a deficit, and this could make them much larger. So the desire here is to find a way to link the two, to pick larger budget numbers, figure out what you think the entitlement system should cost, what you think the tax system should bring in, and hold it at those levels, and control them both. So WOTC, as a controller of the entitlement side, has become a little more interesting to the Republican budget makers. Paul Ryan, as many of you know, was chairman of the Budget Committee. We've talked to him about our numbers, and he seems very interested in them and what they could do. So we will look at WOTC in the next Congress in a very different role, but I think a role that gives it a much higher possibility of being maintained, even if tax reform and when tax reform is enacted.
And for the research credit, you mentioned the rate affecting our international competitiveness, and some have argued that the research credit is also an issue of international competitiveness.
Well, it's an interesting point. I mean, the research credit is very popular, and it was one of the potential provisions that the House wanted to make permanent. The House actually has passed a permanent research credit. It cost about $160 billion and was trying to negotiate that as one of the credits that would have been permanent in the deal. It is likely the research credit in some form will stick around also after tax reform. And I would point out the tax reform is being driven in part because of competitiveness with our European partners. And our European partners generally have lower tax rates. Certainly they have lower corporate rates, some of them as low as 12.5%, I believe. But many of them actually have special credits and other tax expenditures to encourage research and to encourage the use of intellectual property. So as we look at what our trading partners are doing, the idea that you would have a lower rate but still keep some tax incentives is what you see around the world. The idea that you'd have a lower rate with nothing is unlikely to be where we end up. So research is likely to be there in some form once tax reform happens.
One of the questions that I'm getting from the audience is asking us to clarify the notion of a retroactive WOTC. They say if they have already been doing the screening during the year, how would that affect them? And I would answer just in a couple of ways. It would give them an opportunity to go back and screen anybody that had been missed during that normal process. But generally, for a taxpayer that is doing the normal screening, the retroactivity is not terribly important. It gives an opportunity for businesses that maybe were either not participating because the program was in hiatus or were lax in their screening processes, gives them an opportunity to go back and clean some of that up.
Yeah, let me add something. The reason the IRS did it last time was basically they knew that a lot of companies were being conscientious, and they liked that, and were screening. But they also realized that there's some smaller and medium-sized companies that don't really participate in WOTC because of the on and off nature of the program. So they wanted to make sure that they also got a fair shake once the extension was enacted, so that's why they allowed that. So obviously it is preferable to be screening during the year. For one thing, because you can't guarantee what the guidance is going to say. I mean, I can't guarantee to you they're going to do this. They did it 2 years ago, and it was very much appreciated. I think they'll do it again. But you're more protected if you do the screening during the year. If you missed people, and if you were a small company or a medium company and you just didn't want to participate because you weren't certain where the program was, this will help you out. And again, I'm not certain they're going to do it. I think they probably will, but we have to wait and see what the guidance looks like when it comes out.
Okay, and a couple of other questions we have here. I think we've basically already covered it, but why was there such a change from considering the two-year extension to the final one-year extension? What were some of the dynamics that went into that shift?
Well, I mean, I think it was largely a breakdown in the negotiations with very little time left to work it out. There was a feeling of distrust of the White House, unfortunately. And basically, the White House came into the negotiations very late in the game, just before Thanksgiving. They had previously indicated they weren't very engaged, and they came in and basically said the president would veto a deal that hadn't even been inked yet, that nobody had really seen. And there was a sense of distrust and anger. And the House leadership found itself in a situation where some of their members were suggesting they wouldn't extend the provisions at all right now, and they'd wait till January, which would have been a terrible result. And they were able to get people together to agree to at least hold us harmless for 2014 and resume the negotiations in early 2015. And that's why it ended the way it did. People were upset. And they were upset with the president for the immigration decisions. They were not really very happy the White House got involved the way it did. My understanding is the White House basically came in and threatened a veto and then didn't propose any alternative. So you had House members who were coming back to town after Thanksgiving who were saying we won't work with him at all, and others who said we're not going to negotiate the hard part, which is the second year right now. We're willing to do 1 year and no more. And we were advised by Republican leadership offices on the Hill, on the House side, basically that the best they could do was 1 year, and 1 year certainly was much better than leaving this entire decision to January, so that's where we ended up.
Okay, another question that we're getting is regarding the Senate's Expire Act. So we saw in that proposal a new category for WOTC, as well as some interesting ideas about the R&D credit, specifically for startups and having to do with the ability to offset AMT. What is the likelihood, whether in 2015 or in the larger tax reform discussion, that some of those ideas make a reappearance? You know,
ideas tend to have a life, and they tend to be revisited, and sometimes it takes a while to get Congress to do things. So I think that anything that was thought of and that went through committee, as these ideas did, are probably going to come back. But I can't put odds on it. The dynamic's going to be different next year. But those people who were proponents of those changes are still around. For example, the WOTC change was proposed by Senator Portman, who is still going to be on the Finance Committee, Senator Wyden, who's still going to be there, Senator Cardin, and Senator Warner, who potentially will still be on the committee. The Democrats are going to lose a seat on the committee, maybe his. But nonetheless, people who were there advocating these things are still around. So I would expect they'll continue to advocate them. But I couldn't lay odds on how likely they're going to happen again.
Sure.
Okay.
Another question is that the President has before supported a permanent R&D credit. Is he, despite his veto threat on the current proposal, is he still in support of that in theory?
Most likely. He probably is, and he probably would support it as part of tax reform. But again, we have to wait until early next year and see where he is, but it wouldn't surprise me if he was.
Okay, and I'm getting another question on the retroactivity, that if a company does not start participating until 2015, will the retroactive period apply, and is there any kind of a cap that could be processed?
Last time administratively there was no cap whatsoever. None.
And the retro period would take place in 2015. It would only apply to employees that were hired
in
2014, and I don't think it would. Last time, I don't think it applied to anybody hired. Last time it was for the 2012 year. I don't think it applied to anybody hired before 2012. So this would only be for 2014 hires only in theory.
That's right. It is likely it would only apply to the year that they're dealing with, which is 2014. The idea would be to create a sense of fairness for those employers who for some reason weren't participating in 2014 because they weren't sure they were going to get an extension. That's correct.
Okay. And I'll give just another minute here for another question to come in, but that is the questions that we have had up until now. And we really appreciate your time today, Evan, and your insights. It's always great to talk to somebody who knows what they're talking about, as opposed to very often the opposite.
I appreciate it. I wish everybody a very nice holiday. We'll be back at this bright and early next year.
And we will try to make sure we get an email out to this group once the legislation is passed and whatever developments occur. And thank you, everybody, for participating. And we look forward to speaking to you next time.